Welcome back to Stock Watch. Now, as promised, we come to that part of Stock Watch where we grill our guests about their thoughts on the market. Now, this week it's our privilege to have here live in the studio with us Choong Khuat Hock, Director of Research at Kumpulan Sentiasa Cemerlang, and also the author of these two books, D is for Depression and Investing in World-Class Malaysian Companies and High Dividend Yield Stocks. Welcome, Hock.
Thank you very much.
Thanks for joining us on our show.
It's a pleasure.
Okay, let's just kick things off with a very quick question on stocks and sectors you're favoring in the week ahead. What kind of stocks should investors be looking out for?
Well, as the book suggests, the recovery in the world economy is going to be a bit slow. So personally, I favor sectors with relatively resilient earnings. So I think the rubber glove sector has been re-rated upwards, but I still like the rubber glove sector as a whole, and there's still quite a few smaller rubber glove companies which are still undervalued. And also, I believe that because the recovery is going to be slow, interest rates will remain low for some time. So it's quite important to lock in any investments with high dividend yields because, as time goes by, I think there'll be capital appreciation because there'll be a demand for such assets.
What about sort of entry-level stocks that investors who don't have a lot to invest in top glove or say Supermax, what kind of entry level can they look at?
Yeah, I think there are other less covered rubber glove companies. For example, I like Advanta. Advanta is one of the largest surgical glove company in the world. And unlike most of the other rubber glove companies, they actually own their own brand. 60% of their surgical gloves are sold under their own brand. So that means that for those gloves, they have higher margins. And they also spend a lot of money on R&D. They have 8 full-time chemists. So I think such companies will continue to do quite well, even when there's additional capacity. The other rubber glove company I like is Latex. All the factories is located in one location, so they have economies of scale and they can maintain very good quality. They're also expanding quite quickly as well.
Okay, great stuff. Now, let's turn to the economy. Now, we've had many people on this show giving their views on the state of the world's economic recovery. Most believe we'll see some sort of positive recovery by 2010, but then there are those who think it's too early to be optimistic. They think that we should be wary of a double dip or a W-shaped sort of recovery. Now, in your book, D is for Depression, you say, and I quote, "We are experiencing the worst depression since the Great Depression." That is sobering news, Hock. Why do you say this?
Well, I say that because if you look at the Great Depression and what happened to Japan in 1990, it was induced by very high debt levels. And this time around, if you look at the cover of the book, you can see that the debt to GDP in the US has risen from 150% in 1980 and now is almost 400%, which is the highest ever in US history. So when you have high debt levels, which was used to create the biggest housing bubble that the US has seen, when the crash came, if consumers are very highly geared, it will take them a long time to de-gear. So the de-gearing process is going to take a long time. Just like in Japan, it's more than 10 years and they have not quite recovered yet.
Now, I understand that you don't actually refer to W-shaped recovery or any sort of alphabet except for an L-shaped sort of state of things. Can you explain what you mean by this?
Well, L-shaped means that, we saw a sharp fall in world economic output, from second quarter of last year and until middle of this year. So the good news is that we have gone through the sharp vertical decline, of the L-shaped alphabet. So now we are going flat. A lot of people are saying there's going to be V-shaped recovery or some kind of recovery, but my personal view is that it's going to be an L-shape, a bit like Japan, mainly because of private sector deleveraging in the US. US consumption spending is 70% of the US economy, and if the US consumers are not going to increase the spending, then it's very difficult for the US economy to recover in a very meaningful way. Maybe a slight recovery into 2010, but that's for all.
So you're basically saying the worst is over, but we're now in a period of stagnation?
That's right. I mean, this recession is very different from all the other recessions that we've had in the last 100 years, except for perhaps the Great Depression, what happened in Japan in 1990. This depression is induced by very high debt levels. So when you have very high debt levels, then the de-gearing process will take some time.
Okay, we're going to take a short break, Hock. We are continuing to take questions. Please do send them to stockwatch@tv3.com.my. We'll be back right after this.